What is up, guys? Roger here with Vantage Home Loans. So today's topic is, are we in a buyer's market? So of course, we know the last 2 years have been absolutely crazy, nuts. Seller's market stronger than any we've ever seen, fueled by super low interest rates, pandemic, low inventory. All of these things combined cause a perfect storm for home prices to go way higher and to be a super seller's market. A lot of buyers had trouble getting their offers even considered when you're going up against 10, 15, 20 other offers. So have we officially transitioned to a buyer's market? And just as importantly, what does that mean for home prices? Does that mean home prices are going to come down? So we're going to look at those two things. So first, let's take a quick look at some data. Email from Rocket Mortgage I received with some data from Redfin. So in the last several years have been a perfect storm for creating one of the most lopsided sellers markets on record. We all know the pandemic fueled spikes in housing demand and home prices, coupled with the rock bottom mortgage rates, made the housing market a seller's dream. But new data suggests we may have turned a corner towards a buyer's market. So I'm not sure who Black Knight is, but they showed a 0.77% drop in home prices from the month of June to July. So this is month over month, a 0.7% drop in home prices. It's the first time the month over month decline in prices before the pandemic. So it's been a while, and the greatest drop in any month since January 2011. Okay, so it's been a long time since home prices have dropped 0.77%. But does that mean we're going to a housing crash? Okay, so that's the big question. So let's just look at some data here first. Okay, so all right, let's see here. So only 36% of homes are under contract after 2 weeks. So earlier this year, it only took, in 2 weeks, 55% of homes were under contract. Now, only 36%. So only 24% of pending sales are under contract within 1 week. That's pretty low. So that means the majority of houses are staying on the market at least 1 week or more. More than 60% are staying on the market for at least 2 weeks. So that means buyers have a lot of time to shop around, think about what kind of offer they're going to put in, maybe lowball a little bit. So as we could see in the high, it was up near 40% earlier this year and last year. Homes selling over asking price, that's come down. As we can see here, homes are not selling over asking price. There's been more price drops. All this data from Redfin. So as we can see here, we're shifting to a buyer's market. You're not getting 40 offers, 20 offers on a house after 1 week. Homes are not going into escrow within a couple days. It's just not happening. So it is a buyer's market. So that's good. This is, even though rates are high, you have to keep in mind when you buy real estate, you're buying for the long term, right? You're not buying, it's not a quick trade. You're not buying stocks to sell next week and make a quick profit. You're buying, and when you're buying, yes, rates are high, payments are going to be higher, but you have to consider that your salary will increase and then rates will come down and you'll have a chance to refinance. Okay, so with you getting a raise in the future, rates coming back down, refinancing, you make a few $100 a month, you drop your payment a few $100, now all of a sudden you're in a much more comfortable payment. And again, real estate's a long-term game. So I'm kind of on the side of Dave Ramsey. Are home prices going to come? Are they going to be cheaper in 2-3 years than they are now? I don't think so. So let's look at a little bit some other data from Case-Shiller. So Case-Shiller is kind of the gold standard for home prices and data. So home prices growth decelerated in June. So Case-Shiller index rose 18% down from 19.9 in May. Okay, so that means in May, compared to last May, year over year, home values were up 19.9, almost 20%. So when we move forward to June, year over year, June to June, home prices are up 18%. So year over year, they're still up a lot, even though it's slowing down. So the Case-Shiller Index, which averages, measures the average home price in major metropolitan areas across the nation, rose 18% year over year. Okay, so again, from 19.9 down to 18, it's slowing down, right? Home prices are not appreciating like they did during the pandemic. They're slowing down, but they're still going to be going up. Okay, so that is my prediction. I don't think there's going to be a housing market crash. I think pretty soon the Fed's going to pivot. They're going to lower rates, and that's just going to ramp things up even more. Okay, so economists expect home price growth to slow significantly by the end of the year, but prices continue to show large gains from a year ago. Again, even if that year-to-year number comes down to 10%, even if that year-to-year number comes down to 5%, it's still going up. That means if you wait 3 years, you're going to see 5%, 5%, 5% year over year. A house that was 500,000 is going to be closer to 550 in 3 years. So also inventory is expanding. So that's good. Again, another reason it's becoming a buyer's market. There's more inventory. During the pandemic, there was such little inventory. So inventory is expanding. Homes are remaining on the market longer, and buyers are starting to have more leverage, including price. That's Lisa Sturdivant, the chief economist at Bright MLS. Overall, home prices will continue to rise, but the pace of home price growth will continue to decelerate. Again, this is healthy. This is what we want to see. We want to see things slow down to a more balanced and even a buyer's market. A buyer's market means you can negotiate on the price. You could do your inspection. You can request repairs. If the appraisal comes in short, you can negotiate on the price. These are all things as home buyers you couldn't do 6 months or a year ago. A year ago, you'd have to waive your contingencies, no inspection, 50,000, 100,000 over asking, and that's just what it took. And who knows, you might get into that house and later find out you got to fix the roof, you got electrical, you got plumbing problems, you got all kinds of problems. So this is a good thing. Going more towards a buyer's market, of course, great for buyers, more room to negotiate, do your due diligence, check out the house, do a full inspection, check the foundation, check the roof. And if there's a lot of issues, request repairs. And again, getting a better price, I've always said this, getting a better price is much more important than getting a good rate because the price is locked in forever. Once you buy a home at 800,000, that's it. The rate can always be changed in the future. You can always get raises or make more money, and then you can always refinance, but the price is locked in. So always better to get a good price than to get a good rate. So that's about it. Hope you guys enjoyed this video. If you did, drop a like, and I'll see you guys on the next one.